Hello my fellow investors and welcome back to another stock analysis video. Today guys, we're going to cover the company Prologis, mainly because actually I did this one back in July and this is the first company I did when it came to using my new re-evaluation calculator, but it wasn't really that done yet. Like the calculator just wasn't really that well, and I didn't know much about REITs as much as I do now. I still got a lot to learn, but nonetheless it just wasn't that good, and I didn't even have like a good mic either. So let's actually redo this, especially since they do have earnings on Wednesday guys, before market open, and a bunch of other companies I would also like to cover as well. So please bear with me on this guys. On Wednesday there's a lot of companies I would like to cover: Procter & Gamble, ASML, and even Lithia Driveway and Kinder Morgan. So all of these are gonna go to like Friday and even Saturday, so please just bear with me on this. But guys, we're going to now cover Prologis. This is mainly for Elizabeth, she's the one that asked for this. So let's see, using a re-evaluation calculator using FFO and AFFO, if this is a current good price to buy this company at. So coming into the dividend summary guys, Prologis does pay out a dividend of 3.17%, which ends up being 79 cents per share for an annual payout of $3.16, a payout ratio of 56.8%, with a 5-year CAGR of 11.5%, and with 8 consecutive years of dividend payments, which is not too shabby. Now remember guys, when it comes to REITs, they have to give out 90% of their net income in the form of a dividend. So that's actually not out of the ordinary to see massive payout ratios. Ex-dividend date passed as of September 14th, payout date was September 30th, and they pay their dividends quarterly. Coming into now the calculator, we got the ticker symbol of PLD, market cap of $97.2 billion, with a current share price of $105.23. Now, looking at this graph, guys, this is actually fairly interesting. On the 1 year, they're down 24.72%, and on the year to date, they're down 36.2%. They are not at the all-time lows, but they're fairly close, at $98 being the lowest, with $174.54 being the highest. So again, this might actually serve as a pretty decent price to buy it at. Current FFO guys, it is $4.3 billion, and last year's FFO, it is $4 billion. Annual dividends per share, as we saw, was $3.16, which ends up being $2.34 billion being paid out in dividends every single year in accordance to their shares outstanding. These payout ratios in regards to the FFO and the AFFO become 54.5% and 59.62%. Now let's take a look at some fundamentals guys, starting of course with the net income 5 years ago of $1.7 billion to today of $3.7 billion, massive increase of 126%. Now the issue here that I have with this net income is that from 5 years ago to 2 years ago, it was actually pretty consistently decreasing, and then 2 years ago to 1 year ago, it just jumped, going from 1.5 billion to almost $3 billion, which is massive. Now, I don't necessarily like that because it just shows inconsistencies, right? I don't like inconsistencies, but as you can clearly see, they have been able to beat that so far this year. So I'm gonna give this guys essentially for a grade like a 70%, maybe like a 75%, just because I don't like this decreasing right here, but I do understand that they did do pretty well from 1 year ago to today. Now looking at the FFO guys, so when it comes to this company, I fell into the same issue the first time. Unfortunately, for some reason, I cannot find their FFO. I just cannot. I cannot find anything more than 2 years ago's FFO, and when it comes to the AFFO, is essentially the same thing. So unfortunately, I don't know what the average 5-year FFO is when it comes to this. I'm gonna take all of these as 0, so take that information as you will. But looking at this from 2 years ago, their FFO was $2.95 billion, and as of today, they're at $4.3 billion. Obviously, I don't know the change, but that is an average of $3.7 billion. So it is consistently increasing, I'll give them that. So for that reason, guys, based off just these 3 years, I'm going to give them essentially like an 85%, just because I really wish I could have these other years, but I really don't know where to find them. So I'm going to give them 85% just to be safe when it comes to these FFOs from these past years that I do not know. And now when it comes to the AFFO guys, we come into the same scenario. Now you only see 2 here, mainly because the AFFO does not become active up until the end of the year, but it's actually fairly similar to that of the FFOs normally. So if the FFO so far it is $4.3 billion today, the AFFO is probably going to be the same as well. But as you can clearly see, it's essentially like the exact same numbers as we see over here, with an average of $2.3 billion. Obviously the average is lower because we do not have the current one. So for that reason, guys, I'm going to go with, once again, like an 85%. Coming down to the total assets minus the total liabilities, looking at this, guys, we can see that they've been consistently increasing. However, we do see a pretty big jump from 3 years ago to 2 years ago, but nonetheless, it is still very nicely increasing. Even 3 years ago, there was a slight increase of what, $5 billion or so. You can't even see it on the graph that well, but the numbers is 25.8 billion to 26.1 billion. So it's not too shabby. Essentially telling us that they have a lot of assets, more than they do liabilities, so they're pretty much covered when it comes to this regard. Average total assets is $47.04 billion. Average liabilities is $30.6 billion. And doing this difference, we get $16.5 billion. I'm going to give this, guys, essentially like a 95%, mainly because of this massive jump that we see right here from 3 to 2 years ago. But aside from that, it's looking really, really good. Now coming into the shares outstanding, I didn't know this when I first analyzed this company, but turns out, guys, that REITs tend to issue shares because that's just the way that it is. Somebody commented saying, yeah, if they normally do issue shares, but if they're giving you a good return in other forms like funds from operations, AFFO, net income, and that kind of stuff, then it's kind of okay for them to do this. Remember, they do have to pay out majority of that revenue in the form of a dividend, so they have to issue shares. So it's actually not too bad, because in the 5 years, if they went from 532.2 million shares to today of 740.4 million shares, that is an increase, guys, of 39%, which in 5 years, in my personal opinion, is not too bad. So for that reason, guys, I'm going to give this essentially like a 95%, maybe like, yeah, I would say like a 90% or so. And now lastly, when it comes to the total debt, they've actually increased this by around 100% 5 years ago of 9.4 billion to today of 18.5 billion. And now looking at the overall average when it comes to their grades, I gave, guys, net income of 75%, FFO 85%, AFFO 85%, assets minus liabilities 95%, and shares outstanding of 90% for an overall grade of 85%. Honestly, I wish I could be really secure about this grade, but unfortunately, I do not know about these two values because I don't have a lot of years when it comes to this. It really is disappointing, but take this 85% for an overall grade, guys, with a grain of salt. Now coming into the valuations, guys, let's use current price, which is $105, and we're going to see the net asset value, the price divided by FFO, the average 5-year price divided by FFO, the price divided by AFFO, and the average price in the 5-year divided by AFFO. Now with this, guys, let's do the net asset value. First, we do this by taking the assets minus liabilities and dividing that by the current shares outstanding, and we get a value of $52.50. Based off of this, guys, with the current share price of $105, is telling me that it is overpriced based off of the net asset value. Now, based off of the price divided by FFO, we get 22.63. Doing the 5-year average FFO and then dividing that, and then taking the price dividing by that, we get 26.09. So seeing that the current is lower than the 5-year average, or in this case the 3-year average, is telling us that based off of the price divided by FFO, it is looking like a pretty good price to buy it at. Doing the exact same math for the AFFO, we get 24.76, and doing the 5-year, or in this case the 2-year average price divided by AFFO, we get 28.26. So once again, it is lower than the price divided by the AFFO, which is current. Pretty much telling me that 2 out of 3 metrics is saying that at the current price of $105.23, it is looking like a pretty good price to buy it at. Now, guys, obviously when it comes to this takes into account 0 assumptions, but Prologis is a company that there really isn't that much data out there, and obviously I'm not giving you guys any financial advice, and every investment is the present value of all future cash flow. So please, please, please have this calculator and make your own assumptions when it comes to this, because as it currently stands, this does look like a pretty good price, as well as the fact that it is at a close to 52-week low. So again, 2 out of 3 is telling me that it's a good price, 1 isn't, but aside from that, it's actually looking like a very decent price to buy it at. Now the weighted grades, that, guys, you may want to put in your own weighted grades for that, but I personally gave it an 85. You guys should make it your own. As I said, not financial advice, so please have these calculators, discounted free cash flow, the book value, and my reevaluation calculator, and even a dividend tracking sheet for companies like these. I'm giving this out all for free, guys. All I'm asking for in return is just please help me grow my channel. Like, subscribe, comment. It really does help here on YouTube. Thank you so much for everybody who have subscribed. I really do appreciate it. Now coming into, guys, the dividends at the current price. A lot of people will want to buy this company for its dividend, and I don't necessarily blame you. REITs usually have a pretty good dividend. So putting in $5,725 at this current dividends of $3.16, this nets you 54.41 shares, which becomes an annual dividends of almost $172, quarterly of $43, and monthly of $14.33. So based off of everything, guys, it's telling me that this might actually be a pretty good price. However, this dividend could be a little bit higher in my personal opinion. I think there are better companies out there, like for example, DLR has fallen a massive amount recently. I also did a video on them not too long ago, so if you want to take a look at that one, you might want to take a look at that one. But as it currently stands, this dividend, it is good, don't get me wrong, but it could be a whole lot bigger. There are companies out there that have a much higher dividend. All in all, when it comes to Prologis, I wish I could say anything more, guys. I really wish I could. I don't have enough data to make a further assessment when it comes to this. Unfortunately, I cannot find the FFO or the AFFO for the past 5 years. I really cannot. So if any one of you guys know it, please tell me. But for now, I think it's a company that you're really gonna have to do a lot of research, see what kind of developments they're doing, you know, how they're growing the company, figure out what their tenants are, that kind of stuff, and then make further assessment based off of that. Obviously, I will go over the earnings report when this comes out, but for now, I think it's more of just weariness that for me, I'm going to stay away from this. But that pretty much is it for this video. Like, if you like, comment, subscribe. It really does help with the algorithm on YouTube. You guys can follow me on my new tech sites, link in the description below. So with that said, peace out, and we'll see you all in the next stock analysis video.